How's it going, everyone? It's Sam. I just had an awesome conversation with Levi. Levi has a channel that's doubled just over the last 8 or 9 months. I'm really excited to have him on. I'm going to have links to him underneath the video. We cover Bitcoin, XRP, altcoins, real estate, the stock market, the Fed, how we view our portfolios, where we think Bitcoin and XRP are going to top this cycle, and much more. This is the longest conversation I've ever had on this channel because there's so much that we wanted to cover and so much good information. So again, check out links to his channel underneath the video. I am uploading this early to my Telegram group, so you can check out the Telegram. It's completely free. It's just underneath, like the third link in the description, second in the pinned comment. The reason for that is a lot of crypto creators have been getting videos taken down or taken off completely. They've been booted off of YouTube even over the last couple months, so I'm just building something somewhere else. It's completely free, but just in case something happens to my channel. Also, we do talk about leverage. If you want to try out leverage trading or you want to try a new platform, there's a link to BYDeFi underneath. I like this platform a lot. It allows you to trade coin M, which means you can trade Bitcoin with Bitcoin as collateral. So if you have a certain amount of Bitcoin and you want more Bitcoin, you can actually take trades in Bitcoin. Same thing with XRP or Solana. You can actually build your stack without putting more money into it, which is pretty cool. You can do USDT collateral loans or collateral trades as well. And they have some big bonuses going right now. We're actually setting up for an XRP trading event where you just get rewarded in free XRP depending on how much you trade. So check that out underneath the video. All right, Levi, thanks so much for coming on the channel. Of course, like I said earlier, before we start recording this, I'll leave links to you underneath. I want to give you a big props though, because your channel has basically doubled since the XRP run around 50 cents. You were bullish when a lot of other people weren't. And you do talk about other cryptos as well on your channel, but obviously a large portion of your audience is XRP oriented and you've just crushed it. So just right off the bat, congrats and thanks for coming on the channel.
Of course, yeah. No, XRP's absolutely killed it. It's awesome to see, like, especially like November to January and now more recently again, how it's one of like the top performers. I'm really happy to see that. I believed in it in the bear market for a couple of years. It paid off. And yeah, I'm super, super happy that, I mean, just the community around XRP is growing so much too.
Yeah, I mean, I think it's one of the first cryptos that people look at when they come into crypto. Connor and I actually have talked about why that is, but I think maybe a large portion of that is because it's something that people understand, kind of taking over the old banking system, but then also like the price is lower than the top two cryptos above it. So I think people naturally kind of look at it and they're like, oh, $3. I can buy some of those, which we'll talk about like how much XRP is significant in a little bit. But yeah, it's really interesting. And to everyone that, you know, I think XRP is kind of controversial. Some people think it's garbage. Some people think it's going to be worth $2,000 next month. The fact is you can't argue with price performance. Like people have made a lot of money with it at the end of the day. So congrats to everyone that's in it. How are you feeling about it right now?
I'm feeling really, really good. And it's funny you mentioned that about like, I guess some of like the kind of, I would guess like tribalism that exists in crypto, because I went to Bitcoin Vegas recently and there's a lot of Bitcoin people there and a lot of people that like XRP there. But I remember there was one guy that I met when I went to like Mike Tyson's house. He had like this event going on there. And he was like super Bitcoin maximalist. And when I told him that I make XRP videos on YouTube, he was like, what, XRP? Like, how much does Ripple pay you for that? And I just kind of told him, I was like, nothing. You know, I just love this cryptocurrency. I've just been talking about it for a really long time. And you can't, like you said, you can't deny it's performed really well. And that kind of like stopped that conversation right there. He's like, oh, okay, like I can't really argue against that. And I think like that's a very true thing. You just kind of have to look at how cryptos are performing, like what they're building, what they're developing on, and how many people are actually using those tools. And if the answer is they're doing those things really well and better than the majority of other people, I don't think you can really argue with the facts, right? And so I think that's a great thing to focus on when it comes to any cryptocurrency. And I don't believe in maximalism. I really like XRP because of what they're building. But if there's another crypto that comes out that does everything better than XRP, I'm not going to be like, oh, this crypto sucks. Why would you talk about it? You know, I think opening the discussion up and really opening your mind is really crucial to, you know, finding good opportunities.
Yeah, definitely. If new information comes up, we should take that into account and let that inform our investment thesis on something. And I think like a little bit of tribalism, like I'm not tribalistic, but it's good for the cryptos that you're invested in to be tribalistic, I think, because then naturally like people don't want to sell, which means that there's less selling pressure. So, I guess a lot of the people from your channel might know kind of your bullish thesis, but my channel, maybe not as much. So maybe you can go into like why you think XRP will do really well this bull market.
Yeah, I think like some of the largest reasons I think XRP is going to be one of the top performers is the connections that Ripple has. Like they're very well integrated and they have really strong connections with the US government from like a regulatory standpoint. You see them at like the crypto summit, for example, and they're part of these really important discussions. I mean, Brad also recently testified before Congress to talk about why the future of cryptocurrency is so important. And he's a really strong figurehead that is really helping push the entire space forward, not just XRP. And I think that's really crucial. A lot of people go to him and they look at him as like kind of an expert or somebody who's pioneering the space and helping it grow. So I think that's really important. Second, I think Ripple as a team, they've built a lot of different technologies that are just meant to be integrated into banking systems, and they understand a lot of the use cases of cryptocurrency, I think, better than others, and how those institutional partnerships should look. And when you look at like the top holders of XRP, you can see there's a lot of really big money inside XRP, which I don't think is like a coincidence. I think that, very smart money looks at XRP and they understand like, okay, these guys are thinking about the future. Like they're really trying to build products for the future that will help, the industry kind of, move forward. And so I think those two things are really important. And then you also can kind of look at ETFs. ETFs, I think, we saw what it did to Bitcoin. Obviously, that was amazing. We know that that's coming for altcoins, and, we have yet to see that price appreciation for XRP. So I think those three things are probably the largest price catalysts and reasons why I'm like super involved and dedicated to this, the ecosystem. Yeah.
Yeah, and you do a great job of explaining that in your daily videos. Maybe you can give us an idea, because you had a video recently. It's over. XRP just broke the global economy. Then you had another one. XRP is about to shatter all expectations from Tom Lee. Maybe you can give us an insight into what you talked about there.
Yeah. So there's a lot of things that I'm talking about there. I think like with Tom Lee specifically, like he gives a lot of really awesome, like general macro kind of, just I would say kind of like advice on like where the markets are headed in his point of view. And he's been really, really accurate. Like Tom Lee was one of the people that looked at Trump's tariffs and said, I don't think this is actually going to be like a huge black swan. I think the markets are going to keep pushing through and they're going to keep doing really well. And he was completely right about that. So I really kind of like broke down those geopolitics of what's going on there and like kind of grabbed Tom Lee's perspective on how it'll affect the crypto market and just covered that. And I think like that is it's just a really cool thing that we can have like so much information in the markets and like so many people that, can provide good information and share that with the world. And Tom Lee's one of those guys where I'm like, yeah, like he's been dead on like a lot of the time. And he does like XRP. He likes altcoins. He likes Bitcoin, of course. He talks about all of them, but yeah. It's pretty cool. Yeah.
And then maybe you can hit on how XRP just broke the global economy too from about a day ago.
Yeah. So with that, what I was more so talking about, like what we're starting to see is there's a big shift on like how investors are starting to behave, right? So from like a risk perspective, people are taking a lot more risk, more so than they ever would previously. And so kind of going back to that tariff point, like that's obviously something that people were very concerned about, but people are like just ignoring that now. And they're just like going all in on these riskier assets. We're seeing like Bitcoin explode. We're seeing XRP explode. We're seeing all these crypto assets go crazy. We're seeing all these riskier tech stocks go crazy all during this period of time where like, there's probably like record levels of like, also like concerning factors. So in a way, it's like people are just basically saying, screw the US dollar, screw the Canadian dollar, screw all these currencies. I'm just going to go in on these assets because I think they're going to grow outlandishly in comparison to, the US dollar or whatever. And yeah, investor sentiment doesn't lie. And then what retail investors are doing doesn't lie. Like they're going over, like we're hitting record numbers, right? So that's kind of what I was talking about. Like kind of like the economy is broken for sure, like everywhere around the world. And people are looking for a new system that serves them better. And I do think that XRP and I do think that Bitcoin and many other cryptocurrencies actually fill that hole very well.
Yeah, it's interesting you say that too, that people are going more risk on, because Google just had their earnings yesterday. And even just last year, from like 2023 to 2024, they grew their net income by 30+%, 35%. Yesterday, they had like record margins, record revenue, record free cash flow, and the stock is up 1.6% today. Over the last year, it's up 12%, but they've grown earnings by 34%. And yet, like XRP, which doesn't really have earnings to speak of, is up 430%. And even Bitcoin, which people think is boring right now, is up 80% over the last year. So like, you can have great companies that are the most profitable in the world, and people still don't want to buy them because that's not what the story is right now. People are moving to digital assets, which is just so interesting to watch. And I'm glad that, you know, both of us were here the entire bear market, pounding the table. Hey, we think now is a good time to buy, or to dollar cost average, or to trade. And we've been right. We've had better returns than just about everyone. And a lot of people that are watching this have too.
Yeah, exactly. I mean, it's honestly, it is insane. And I do think it's always important to recognize that everything kind of comes in cycles, right? Like there's going to be periods of time where like certain stocks will perform better than cryptocurrency and vice versa. And so I always try to remind everyone that, you know, crypto, it's very volatile. We'll have great times where everything will feel amazing and you're on top of the world. And then there'll be other times where it'll feel like everything's kind of burning down, right? And so it's important to remember that it never lasts forever. You know, it's never green all the time. But yeah, I mean, obviously it's good to celebrate what we've accomplished, because it is incredible. Like it is truly incredible that we are here where we are today. I think it broke a lot of people's expectations, and, you know, how far the crypto space as a whole has come is just, it's insane. I mean, you look at what the government is doing now in the US, like, no, you couldn't have said this was going to happen in 2021. Like no one could have predicted that, you know, but here we are, you know?
Yeah. And we'll stay through to the end of the video, because we'll talk about like when to take profits, how to take profits, that kind of thing. It's so interesting though, because like we're talking about how this is unprecedented. This has surpassed our wildest expectations. And I still get comments every day like, this bull run sucks. Like I'm losing money. People keep on saying that. Like I started with $10,000. Now I'm down to $4,000. What would you say to those people? And like, maybe you kind of can understand what they're doing if they're losing 60-70% when we're in a bull run. But what are your thoughts?
Yeah. I mean, I obviously, I think like if you're up as much as we're up and you're down like 60-70%, there's obviously something that's going wrong. It's probably like over leveraging yourself is what I imagine. Like there's probably people that are out there like maybe trying to short or time the market too much, and then they're getting wrecked along the way. So like what I do personally, and what works really well for me, is like I don't like day trade. I do swing trade, you know, and like I will not use the majority of my balance for that. Like I'll maybe use 10% of my overall crypto balance for like futures leverage trading. The other 90% is like long-term holding / dollar cost averaging. And so I kind of split it up that way because, you know, like futures trading, it can be more risky. I've done really well with it. You know, it has been really amazing. But at the same time, when you're newer into futures trading, this is a mistake I see a lot of people make, is they make a little bit of money and then they feel overconfident, and then they start making these moves that, you know, basically get them wrecked. And then, you know, their whole view of like crypto is like negative, and then they start venting on YouTube comments, and they're like, this bull run sucks. And so I guess my way to answer that is like, yeah, don't stress yourself out too much. Don't over leverage yourself, because you could hurt yourself, you know, doing that. And focus the majority, like I've done, maybe like this is just what's worked for me. This is not financial advice, but what I've done is like just majority long-term holdings. And that way you're going to be a lot less disappointed when, you know, your futures trade doesn't work out, if that happens to you. So
yeah, definitely. And we have similar ideas, or similar, we have similar portfolios in that way. I have the majority in spot. But yeah, I like to trade a little bit because it is easier, I think, to take profits on levered positions than it is with like my long-term Bitcoin bag. It's hard to like pull out the cold storage, send it over, and then sell it. It feels worse compared to just hitting a couple buttons, taking profit. And I think I just like leverage trading a lot more than like meme coin investing or very small crypto investing, because it's so much more work to learn a lot about a $2 million project. And it's much riskier, I think, than just going 3x on Bitcoin or 5x or whatever, or XRP even. So I think a lot of people do get down that meme coin rabbit hole, and then they just lose a ton of money that way. So yeah, just be careful with what you're doing. Like don't try to change your life with 100x leverage trade by putting all your money in there. Like, get good at it. Focus on like the next couple of years, being able to grow that portfolio. Kind of switching back to XRP. What amount of XRP is significant? Like, I like doing these videos. Obviously, everyone's different. And like, I don't know if you lift, but it's kind of like a milestone when you hit like 95 pounds on the bench press, because you have like 25 on a side, and then like 135 pounds might be different kilos, but like you have the big plates, right? And like nothing really changes. Your life doesn't change completely, but it's a cool milestone. Are there any numbers that stand out for XRP holders where like, hey, you made it to this significant milestone if you hit this?
Yeah. So like the nice thing with XRP is there's this one guy, he created what's called like the XRP rich list. And so you can see kind of like the distribution of holders and like how many people have certain amounts of XRP. And the vast majority of people have less than 500 XRP, or within that range, like 500 to 0 XRP. Like that's like the vast majority. I think it's like somewhere around maybe like 80%, maybe a little bit more. So like that is true with many different cryptocurrencies, because people will just have a little bit on a wallet, you know, just for like gas fees or whatever, or maybe they'll have 0 because they emptied the wallet and the wallet still exists on the blockchain. But like what I noticed when we talk about like more like active investors, of people who are actively buying and accumulating XRP, once you get above like 10,000 XRP, you really start to set yourself apart from the pack. And so like, I think like if you're like the average person with the average salary in America, we're talking purely averages here, I think like personally 10,000 XRP is a really good like benchmark to try and hit. You know, I think it's really reasonable for most people in the Western hemisphere. I get it, like people in other more like less developed nations, maybe that's not as realistic, but you know, that I think that's a great starting point. And then from there, I don't see any reason to really stop, to be honest. You know, much like when you're trying to hit new PRs when it comes to lifting, you know, you want to keep pushing it higher, right? So that's what I do anyways. Oh yeah, you have the rich list here. Yeah. Perfect.
Let's show the screen. Just to provide a visual for everyone. And the cool thing is like there aren't that many people that hold XRP or that many wallets, because you can see the top 10% and there's 663,000 wallets. So like only what 6.6 million wallets that hold an amount of XRP, I think. Like
a decent amount, yeah. When you go to like the 0 to like 500 XRP wallets, like those ones, there's a lot. Like a millions. But yeah, you can see here like there's less people that have like a higher distribution for sure. Yeah.
And the crazy thing is too, if you've noticed over time, there are updates on this. So this is from July 8th. This is from 2024, and you can see like a big difference in what you need. Now you need 2,500 to be in the top 10%. Back then you needed 3,000, and then a year before that you needed 3,600. So you can see a distribution where like people that have a few thousand XRP are selling, or like new people, I guess, that are coming in can't afford that amount of XRP, which is kind of cool. So the goalposts are moving over time. It's getting easier in XRP terms to get there, but it might be a little bit more costly in US dollar terms.
Exactly. Yeah. And like another really important point is there are so many people in like different places like Venezuela, for example, or Zimbabwe or Nigeria that are coming into cryptocurrencies, and like they just can't afford a large portion, but it makes so much more sense for them to hold XRP or Bitcoin as opposed to their native currency in their country, because it's getting devalued at a rate that's so high that it literally is like losing its value every single day. And so for them, it's like, okay, like, yes, I'm 100% just going to get some XRP and I'm just going to have that. I'm going to use that for my daily transactions. Like that actually secures me. And I'm hearing more and more stories like that. So you're going to see a lot more small wallets that just have maybe like 20, 30, 40, up to 500 XRP in them for that reason too. And I think that's a great thing. I think like if we have a lot of very small holders for any cryptocurrency, it does provide a lot more stability and, you know, just more people in the ecosystem, which I think is a win-win for everyone involved.
That's cool. Do you have a price target on XRP this cycle? This is the juicy part. This is what everyone wants to hear.
Yeah, absolutely. I think like there's obviously a lot of factors that go into that, but like I think in like kind of like a bullish case scenario, if like XRP ETFs go well, if like the Fed starts lowering rates like decently soon, like I would say within the next few months, like we start getting some rate cuts, and we also see like the hidden road acquisition from Ripple actually start to, do all this stuff. Like if we get all these bullish things that are in the works already to like actually come to fruition, I do think that a $20 XRP is a realistic price target. And I've done the math. It's actually possible that it goes well beyond that if we do hit some other benchmarks. But I like to say $20. It is a pretty bullish price target, but I do think that if we do achieve everything that we're currently working on, which is in the motions, it's definitely something we can do. And the reason why I kind of say that is when we look at, for example, at Bitcoin and the effect of the Bitcoin ETF on that cryptocurrency, we could see, especially during 2024, how Bitcoin, gained billions of dollars in market cap from that alone, right? And during that same period of time where Bitcoin maybe went up 2-3x, we saw XRP go up, 5x because whales would kind of recycle liquidity down to XRP after they got their Bitcoin gains, and it happens the other way around too. When people feel like XRP is no longer the thing to hold, they cycle it up to Bitcoin for more stability. But anyways, that because XRP has a much lower market cap, it can grow a lot faster during those periods of time, is my point. And so I do think that $20 is in the cards. If the ETFs get approved, if the Fed lowers rates, which I think is going to happen, looks like it, hopefully. And of course, if Hidden Road starts processing transactions through the XRP ledger, which they're aiming to do before the end of the year.
You can definitely see people go more risk on trying to get access to crypto, like the Circle IPO. It went up 7 or 8x within a couple weeks. And we have Coinbase going up significantly, billions of dollars going into the Bitcoin ETFs every week. Now, $1 billion plus going into the ETH ETFs every week, the last 2 or 3 weeks. So like if XRP is the next spot crypto that people get access to, I could definitely see people going more risk on and buying that as well. Moving over to BTC. Obviously, Bitcoin kind of has moved the market up until this point, at least. How are you feeling about Bitcoin? Any predictions for the end of the year, timing of the peak of the market or price or anything?
Yeah, that's a good question. Like, I honestly think that Bitcoin will peak somewhere between $150,000 to $200,000 per coin. And once again, I know that's a huge range, obviously, because Bitcoin's a multi-trillion crypto at this point. But like, the reason why I give it such a large range is, once again, it does depend very heavily on like U.S. fiscal policy and the Fed, and like we just don't know. Like there's a lot of uncertainty there. I think like tariffs play into that too quite a bit, and also like when is the Fed going to start raising rates too? Like we don't know exactly when that's going to happen and how inflation is going to look in the next 6 months or whatever. We have some ideas, but I would say $150,000 to $200,000 is like a pretty solid range that I'm comfortable with. There are some people out there that think like Bitcoin can go much, much higher than that. And I really hope so, because I mine Bitcoin. And if it did do that, like I'd be making, a tremendous amount. Right. But yeah, I'm basically banking on 150 to 200, right? Because if that happens, I'm secure on my mining operation anyways. So I'm happy with that, How about yourself? I'm curious. What do you think?
Yeah. It's hard to put a number on it, just like you said, but I wouldn't be surprised if we went up to 150, 200. It's hard to tell though, too, because like if true scarcity hits, because we're already seeing the OTC desk run dry. Like if Saylor keeps on buying at this level and every other treasury company keeps on buying, and we see any kind of excitement, like we haven't seen a big splashy company buy Bitcoin like Google or Amazon or anyone like this. It's hard to tell, because just like altcoins can run up and like you could hit $20 XRP, but the next day it's down at like 15. Like it could just spike up 25% in a day or something, or over a day or two, and then come back down. I think Bitcoin could do the same thing, but I do see like there are dangers with all these treasury companies. They're basically worthless companies that are trying to rotate into treasury companies. Like they're losing money at their normal business. I could see them being forced liquidated depending on how they're buying the Bitcoin. Some of them are just like selling shares. So it's not like that adds extra risk to the business. You just own less of the business. But I could see some kind of event like that. But I feel like there's a lot less risk of a big pullback than there has been in the past. Like I think it would be more of a macroeconomic event that would cause it than something crypto related, because like BlackRock and Fidelity aren't doing the same things that FTX and Binance did last cycle to like make there be leverage and danger. So It's hard to put a number on it because I don't know when the end of the cycle is going to be. Like we could just go up 20% this year, like till the end of the year, 30%, then another 40% next year, and maybe a short like 30% dip, and then we go up another 10% on top of where we already were. So I guess like maybe an end of year maybe is the better thing to guess or to estimate. I'm gonna say 150-ish. I think 150 is within reach. And I know some people are like, oh, that's boring. Well, that's still a 25% return from here after we're already up 80% last year and 100% the year before. So I think that would put us like in the same range as some of the bigger companies in the world. And with the flows we're seeing, like we don't need an explosive move. Usually Q4 is the top of the market this year. Like so some people will be calling for a dip. We'll probably see some kind of dip, but if the Fed starts lowering rates, we continue to see all this buying. I just don't see us falling down 80% or 70% like we have in the past.
Yeah, I agree with that too. I think it's going to be less volatile on the downside for sure, because we just have so much more institutional involvement this time around that I think that's going to bring more stability naturally. The way that I kind of look at this bull run is like, I view it similarly to like the .com bubble. I kind of like draw parallels there because during the .com bubble, there were like certain companies that were actually profitable, like Amazon, for example, right? It was a great internet company. It was very profitable. And of course, all the .com companies had a correction, but the ones that were actually profitable and providing some kind of valuable service or were used for something valuable, those ones came out of the crash and just continued growing over the next 25 years, right? But like a lot of the other ones that were producing nothing of value, they kind of just collapsed and disappeared, like never to be heard of again, right? And so I think like this is going to be kind of similar. I think that like Bitcoin and XRP and Solana and like these types of projects that are building real world utility for people, I think that they're going to come out of this okay. I don't know if it's going to be the same for a lot of the ones that are just kind of fluff and hopping on fads and just kind of saying, oh yeah, this is the next big AGI, whatever. I don't know, right? I don't know what's going to happen with those ones particularly, but yeah, I think it's relatively much safer than 2021 for sure. Because FTX and Binance, like that was crazy what they were doing with users. I don't even know how that even happened, but yeah, I mean that's just insane that did happen. And obviously it's a much different world we're in today. So
yeah,
that's good.
I wonder if there's a top 100 crypto dominance chart. I don't think I've seen one before, but I agree with you that like. Last cycle, it seemed like crypto is going to take over the world. And now like none of us really think that. It's like, okay, these cryptos are going to do really well and could pull some from like the traditional system. But it's not like we just think that blockchain is going to be everywhere, which it might be. It probably will be. But it's not like, I don't know. It doesn't seem like this game-changing technology like it did last cycle. So I think there are people that want outperformance, but maybe they're more towards leverage trading versus like I'm going to go buy, some small AI crypto at a $500,000 market cap. Like there's still people building those, but they're not getting a lot of liquidity right now.
Exactly. And I think that's actually a really good thing. Like what I would say is this cycle feels a lot more grounded because the previous cycle, nobody really knew what the ceiling was, everyone's like, oh, everything is going to go crazy. And then sure enough, all these meme coins were blowing up and making millionaires overnight, like every single day, right? It was the most absurd thing ever. And these NFT projects were going crazy and like making these overnight millionaires.
The metaverse.
Oh my Lord, the metaverse, the Web3 metaverse. Oh, we were going crazy. But I think, this time around, it's a lot more grounded and realistic, and people are looking at it and they actually understand much better, like what crypto's role is in society, and they're not like inflating it as much. Like there still is some of that where people are like, oh yeah, it's going to take over the world, whatever. But I think like, for example, what the Robinhood CEO is doing right now, which is like tokenizing the stock market. I look at that and I think like that's genius. 24/7 stock trading all the time. People want that, right? People don't want it to be controlled by Wall Street or like, these little hedge fund managers that, have way more influence and can do after hours trading when we can't, right? Of course, everyone wants to be able to trade stocks 24 hours a day. And then you can see every single transaction on the blockchain. Like that provides more transparency and people like that, right? I think I look at that and I'm like, okay, that's really smart. I think that's the future. And then I also look at like ETFs and real world asset tokenization and like being able to trade real world assets through crypto. And I think I think like, yeah, like that makes a lot of sense. I like that, especially in the world of AI that we're headed into, where like deep fakes are becoming more and more prevalent. We need something that can like actually verify, you know, whether or not something is legitimate. And I think blockchain technology plays a really integral role in that. And so I'm starting to really like piece it together. And I think like this is just the natural way things are headed, right? AI, deep fakes, really concerning. Okay. Crypto kind of solves that problem. We have verifiable ownership on the blockchain that can't be changed. That's great. And then I think like real world asset tokenization is going to be really integral for that too. And so I look at that and I think, okay, like, yeah, I can see trillions of dollars coming into crypto through that avenue, right? That makes a lot of sense to me. And so I'm really excited about that. Like crypto's going to be kind of like, I would imagine like the rails of the new financial system in many ways. And I think that's why all these banks are starting to make these stable coins. Like they realize that they're like, oh, like this model is good. I want to be part of this model. You know, it makes sense.
Yeah, they don't want to get left behind, especially if, you know, I can go to JP Morgan and I can send a wire out at any time of the day from my phone. They don't want to be, you know, stuck at the 9 to 5 banking hours and then lose business. Yeah. I say crypto won't be everywhere, and it's like literally it is going to every single bank. But hopefully people know what I mean. You know, it's not going to take over like gaming, take over your video watching experience, take over everything you do throughout the day, like we might have in the past. Yeah. Okay.
Yeah.
Let's say you're someone that,
oh, man,
yeah.
The watch to earn fat. I don't know if you saw that. Like you watch YouTube videos and you get paid for it. Like just the sort of stuff that were coming out in 2021 was insane. Sorry, but yeah, you can.
Yeah, everything. Yeah.
Yeah.
Okay. Let's say you're coming into crypto now. Obviously there will be people that come into crypto as the price goes up, and you're someone that makes, I don't know, $50,000 a year. You have maybe a little bit of student loan debt, but you have maybe $1,000 extra a month to invest. So you're still saving like a decent amount. Like that's 20% of your income. Where would you put it? And different from what I've done in the past, you don't have to just put it into crypto. You could also put it into stocks or ETFs. Like, how would you approach that as someone that, you know, knows what you know?
Yeah, that's a good question. So like what I do personally, and this works really well for me, is like I only invest into companies or cryptocurrencies or things that I really understand, right? And so I kind of based my distribution of my portfolio based off of that. Like I would say in general right now, and this is more risky than I think most people would be comfortable with, but right now about 50% is like in crypto, right? And then I do like about 25% in stocks and roughly about 25% in real estate. Like that kind of fluctuates, the stocks and real estate, you know, but I do like to diversify. And the reason for that is like no industry is going to outperform every other industry all of the time. And some industries are more stable and et cetera. And so for like, in terms of like wealth preservation, I think like this has been working really well for me. And so that's just what I continue to do. And so I would say like it really depends on the individual, right? Like I think everybody will have a different baseline of knowledge, but I think like that the general thing that I've found is if I don't understand something, I'm just not going to invest into it because I don't really know what I'm getting into. And I think that's the most important thing, right? Like and Warren Buffett kind of preaches that as well. And it has worked. Like the stats there are undeniable too. Like he only invests in industries, and sure, he hates cryptocurrency, whatever, but there are some good things to learn from the guy, right? So I think that's one of them for sure.
Yeah. And I've changed how I thought about that over time too. Like in the previous cycles, I was like, I think this will go up. It's a genomic stock, or like, I don't know, some coin that's in a sector that's hot. I'll put in $1,000 or $2,000. And that's like I think that's a pretty poor way of thinking about it, because I'm basically saying, I don't need to know what it is. I think it will go up. It's basically gambling. And I'm saying that $1,000 or $2,000 isn't enough for me to care, which is stupid. Because if I put $1,000 into Bitcoin, and it goes up 5x, like that's $5,000 I could have had that I just was lazy with. So I think like a lot of people start doing that early on, that they're just like gambling. They don't really understand what they're buying. But yeah, I guess I've talked to a lot of people that have made a lot of money in crypto, and they are split up very similar to like your asset allocation. I think I'm relatively close. I have almost equal amounts in real estate, crypto, and stocks. And I think about them all differently. Obviously, like real estate, you can lever up and you can get really good returns, maybe not as good as crypto, but like better than the stock market. And you can get cash flow if you don't lever up. Obviously, the stock market is just kind of steady. Like you're investing in the best companies in the world where there are 100 or 100,000 employees just trying to be as profitable as possible. And those
For
are
sure.
like the top tech companies are the best companies in the world. Then you have crypto, which is growing the fastest. So I think it provides good diversification. And like so many people early on to go all in on crypto. And then psychologically, they can't hold it. Like they think they need to go all in crypto to outperform, but then they can't hold it because they're all in on crypto and then they sell at a bad time. So I'd rather have like 50% crypto and hold it for the next 10 years than 100% then panic sell, which some people do.
Yeah. And I see that mistake all the time too. It's really funny. Like I'll have like friends and family who like are starting to see my YouTube videos, and then they'll message me and they're like, what do you think? You know, should I like just go all in on XRP? And what I say is like, I don't think that's a good idea. Like this is not financial advice, but like I do not think that you should go all in on XRP or Bitcoin or anything. Like I don't think you should put 100% of your money into any asset ever, because ultimately, you know, that's like a bad investment decision if you really look at the stats, right? Like if you can diversify and have like a good risk allocation and be involved in so many different industries, like I think your long-term success rate on average is going to be much higher. And sure, you can get really lucky. Like you could do like what I did, which is like basically put 50% of your money into XRP during a bear market when it's trading at 50 cents and have it explode. But like, you know, I didn't do 100%. And like, I'm honestly happy that I didn't do 100% because I'm also learning a lot more about other industries too by spending some time in those. And those valuable lessons will pay me dividends my entire life too. And so there's a lot of valuable lessons you learn when you're just researching and absorbing information all the time. I love real estate. I love stocks. I love looking at good ETFs, and you can get really good returns on ETFs too. Like some ETFs I've invested into, like they've consecutively gone up 18% or more every year for like the last 2-3 years, right? So like that's insane. You know, that's awesome for the stock market. It's basically almost double the performance of like the average across the market. And so yeah, I mean, there's great money to be made there too, and I wouldn't pass that up. I'm really happy that I got involved in that, and sure, 5x returns on XRP is much better, but you know, I'm not gonna be upset about it because I know the stability of the stock market is more because there's more capital there, obviously. So that's a huge proponent too, right?
Yeah, and like you might want to take profits on cryptos, but you don't have to take profits on the stock market until you retire, maybe. So then you're looking at taxes too, and like it's easy to say now I should have gone 100% into this, but like there's a real chance at the bottom of the bear market that we could have gone down further. Like FTX with the collapse, like FTX was collapsing and we really didn't fall down much after that. At least Bitcoin, I think, only fell 10 or 20% because it was already down at like 19,000. So like, it's easy to say now you should have gone all in XRP or Solana or something, but those are really the only two that have outperformed in my mind, Bitcoin, besides maybe one or two like Sui, but like, it's been hard to outperform that and to know, you know, what would have happened. So yeah, I'm right there with you. I tell people the same thing. Like if you're asking whether you should buy something, you probably shouldn't. Like just if you don't know that you should buy it, you shouldn't, because I'm not going to be there when you want to sell it. Probably you're just going to like freak out or text me, and then like you don't know enough to have that that conviction to hold or buy more. Like you should be excited when it falls.
100%. Yeah, the baseline knowledge has to be there, right? Because if it's not, you're not going to understand like market dynamics and like when is a good time to DCA out versus DCA in, right? And like that's why I think that baseline knowledge should be there for everyone. And like if not, maybe just talk to your financial advisor. As long as he knows what he's doing, you know, that might be good too. But they're not going to recommend crypto at least yet. They're getting there. But yeah,
we need to find an advisor that is bright that also understands crypto, because I have not seen any that are willing to go out on a limb or are allowed to. But okay, you mentioned taking profits, DCAing in or getting out. How and when do you plan on taking profits this cycle? It would be a mic drop moment if you're like, I already sold all of it or something. But
I'm out, guys. This is my announcement. No, can you imagine? So that's a great question. And I think that like this is something that really depends heavily. And what I'm looking at, this is what I'm doing, is I'm just looking at the Federal Reserve's policy, right? And so what I've learned is the global M2 supply, like basically the global money supply, has a really strong correlation with the price of digital assets like cryptocurrency. It has a 90% correlation with a 3-month lag on Bitcoin, and same with XRP, 90%. And it's a 99% correlation with the stock market, right? So it's even much higher with the stock market. So I'm just kind of looking at the data, I'm looking at the facts, and I'm basing my decision on that, right? Basically, when the Fed has lowered rates as much as they're going to lower them, and they're starting to change their policy to look to start doing quantitative tightening as opposed to easing, they're starting to raise rates. That's when I'm going to start dollar cost averaging out. You look at like the historical examples of every single time previously that the Fed has started doing that and money supply has started going down, or I'll also be looking at M2 when M2 starts going down. That's when I start basically. And so what I know right now is that the policy is really strongly geared towards easing, especially in the United States of America, which is currently still the world reserve currency. I see no point to start dollar cost averaging out at this moment. But when I notice that starts to shift, I'm definitely going to start that consideration for sure. How about for you? What do you think?
Yeah. So, that's first of all, I think that's interesting because that is like that's far away in my mind. Like it feels far away at least because we're in crypto, but like yeah, like the Fed hasn't cut rates yet. I guess they did it like one time last or at the beginning of this year or last year or something. But like
it's 24. Yeah,
you're almost waiting for like there to be another big issue that causes us to raise rates, which is pretty rare, but like something economically that forces them to bump up rates. So you could be looking at like a year or two almost.
I could be. And honestly, like if I just like, I guess like my biggest thing is like once those rate cuts start to happen, I'm going to start considering it more and more, right? Because I know the capital is going to flow in and I know we're going to probably peak around that time. And so that's what I'm going to be paying very close attention to M2, right? I'm just going to be like laser focused on that metric. And you know, it's going to take a lot of, time to make that decision, but I'm going to make it eventually. I would say like the way that things are looking right now, it's definitely going to take some time just because the Fed is really dragging their feet while other countries are cutting rates very aggressively, like Europe and China, for example. Now, this is another thing, right? It's not just the US that matters. It's also Europe and China. If Europe and China start raising rates, okay, I'm going to start taking that into consideration, right? It's not just the US because we have big players in the space. Europe's multi-trillion economy, obviously. China, same, right? They're huge. They're going to have big impacts on the market. They've already been very helpful in helping us get to where we are right now with rate cuts. So I'm also going to be looking at that too. So that will play a part. It might not be quite like 2 years, might be 1 year, right? We'll see what happens with those guys.
Yeah, that's a good point. US centric investor here, but obviously so many countries have been dropping rates more aggressively than the US.
Yes.
This is something that I look at because you asked me. This is the Bitcoin spiral chart for everyone that has never seen it.
Yeah, I've seen that.
Yeah, it's very confusing because time goes around in a circle. Each circle of this yellow is 4 years. So it shows you cycles and shows you like this is 2013, 2017, 2021, and 2025. And this is the second half of the year. Every one of the last 3 cycles, we've topped this half of the year almost at the exact same time. So like October, November, December, we've peaked. And then we almost bottom within a couple months of each other too. Like 1 year after when we peak, we bottom. So I'm not basing everything off the past because everything always changes, right? We start hitting new peaks earlier this cycle. So some people might say, oh, well, we will top out even earlier. But with what's happening with the Fed and with what's happening with the stock market, like I don't see us crashing like we've seen in the past, like I said before. So I don't really want to sell Bitcoin unless we get to some level that is just kind of absurd. And it's not absurd for the long-term view, but like if we went up to 350,000 or even 300,000 or something like that relatively soon, I'd take some profits off the table just because that's significant life-changing money. It's going to throw off my portfolio a lot. But what I'm more likely to do is sell alts. So if we continue to pump, let's say Bitcoin's at 150 and XRP's at $7 and like Ethereum's at, I don't know, $6,000 or something, I'm going to sell my alts. I want to sell all my alts this cycle. And I'll do a mixture of selling the spot bags of alts And I do have some ETFs too, some like Ethereum ETFs and stuff. And then I'll be trimming my levered positions. I've done that once or twice just to pull out initial. But that's kind of what I'm looking at, just because, you know, I'm going to be kicking myself. And I'm like, oh, the last 3 cycles, we've always peaked out. We have everything pumping 20% a day for 3 days in a row. Like, I'm going to take some profits off the table. And I fully expect to be wrong. Like, I know that I'll be wrong, and I want us to keep pumping afterwards. And I'm okay with that. That's just how it goes. Like, you can't jump out at the peak.
Yeah, you'll never time it perfectly. That's 100% for sure. I mean, look at like Warren Buffett and how he's treated every single previous bull and bear cycle. What he does is like he never times the peak perfectly, but he's consistently taking money out when the market is getting unreasonable, and he's consistently putting money in when the market is like basically on a fire sale, right? And because he's done that consistently every single bull run for like the last, I don't know, like 50, 60 years, whatever, how long he's been doing his business for, right? He has literally made hundreds of billions of dollars for his investors. Like, it's just an insane amount of money. And so like, you don't need to time the top perfectly. You just need to be taking money out gradually during the bull and putting money in gradually during the bear. It's really that simple. You don't need to overcomplicate it. If you're one of those people that like are perfectly trying to time the top, like I want to sell Bitcoin at exactly $200,000, perfect market top, you're probably not going to actually sell there, because it might hit 198, and then you didn't hit your 200,000. You're like, oh, I'm going to hold, and then next thing you know, Bitcoin's back below $100,000, right? And then you're just holding for the entire bear market. You don't want to be one of those people, right? For sure. So I 100% agree with your thought process on that. Like, if you're actually in this to make money, and you know you're looking at strategies that actually have worked, yeah, that 100% is a strategy that has worked for sure. And I do think that's a great way to go about it.
Yeah, and it's always better to have a little bit of extra cash than too little cash. Like, I know people say cash is trash, but it is a good feeling to be like stacked and then still have skin in the game and still have your net worth hitting new all-time highs, and then you're protected on the downside. And maybe then you do buy real estate or stocks or something that's maybe a little bit less overheated, because there will be dips. Like, there will always be a 30-40% dip in Bitcoin, a 50% dip in XRP. Like, that's going to happen because these move up so quickly that people get freaked out, or leverage gets triggered or something. So you're going to have opportunities. I think that was one thing that I did poorly in the past, is like I felt like I needed to get in on stuff because it was like fleeting, but there's always going to be an opportunity where you can put money in the future.
For sure. Like, everything works in cycles, right? Like, you know, if tech stocks are doing bad, maybe like certain commodity based stocks are doing well, you know, like everything's working in tandem, and like one thing's up, other thing's down. There's always an opportunity. And like, honestly, like you like, I think the best way to learn is just to study the greats, the people that have consistently over their entire career actually made a lot of money, and look at like what they're doing. You know, what a lot of these guys are doing, for example, like you look at like, I don't know, like Bill Gates, for example, you know, he'll sell a lot of like tech stocks during a huge cycle like what we're seeing right now, and then he just goes and buys a crap ton of farmland with it, right? and like, then he might sell that farmland and buy tech stocks when he feels like they've bottomed out. That's what like his financial managers are basically doing. And it's a great strategy, right? It works really well. They're making billions of dollars doing it. So obviously something's going right. And maybe you don't agree with Bill Gates and what he's doing, but you know, you can still learn something from it at the same time, right?
Yeah, definitely.
Yeah.
I think you had a couple questions for me too. I'm happy to jump into them.
Yeah, let's see. Let's see which ones we've kind of gone over already. Okay. Yeah, I think this one's really good. This is a pretty good question. So I wanted to ask, what do you think about this? When do you think that Bitcoin is going to start to lose dominance to altcoins? Like, we've seen it happen in 21. There's like a period of time where it's altcoin season, right? Basically asking you, when do you think that altcoin season is really going to hit this time?
Yeah. So I just pulled up the chart. Like, we regularly see 2-3% moves. I think we even saw like when XRP rallied a lot in November and December, we saw a move from like 61% down to 54. So I guess I wouldn't consider those alt seasons just because they are like alt pumps.
Yeah.
But XRP's actually sustained the pump really well, even though dominance has gone up. Let me actually pull this up.
Yeah, let's see it. Let's get that visual.
So you can see the channel here. Like, I think we need a break under this like 60% level. And we started to come close to it, but we jumped. I could see this happening when the Fed starts lowering rates, especially if they give like I don't know, if they give some guidance like, hey, we want to continue to lower rates because everything looks good with inflation. Like if they signal that they're going to continue lowering rates, I think people will go a lot more risk on than like, hey, we're just taking it meeting by meeting. We don't see us needing to lower another quarter point in the future like that. I don't think the market will be super happy with, or maybe it will just be like a wait and see approach. But I think once that happens, people will go more risk on. The cost of capital is lower. I think people will funnel money a lot more into the markets just in general because they're not going to be getting 4%. Like I have money in accounts that are making 4% right now, and I'm just storing it for a good opportunity. Like I'm less likely to do that at 1% than 4%. So
Right.
I think we could see an altcoin season then. Like we talked about, I think there will be cryptos that are just kind of crap cryptos that will still do well, that will die off in the next bear market. But I think the majority of the coins that will be going up are like the top cryptos, the majors. And then I think people will lean towards leverage. I think there's better information about leverage just in general this cycle. We see like large players are doing that, like MicroStrategy. They're essentially levered Bitcoin. So people understand that a little bit more. They might be willing to go to like BTCC or BYDFi or something and take on a little bit of leverage that way.
Yeah.
So I think people will be searching less for those small cryptos, and we'll see Solana, Ethereum, XRP, SUI, like those, I think will be the big winners. So I guess you said like when, I think it could be relatively soon, like this fall, especially like Bitcoin can still go up to new all-time highs, and we could see dominance fall because the whole market's exploding. And I would kind of expect that. That's how I view it. And I went like 100% into Bitcoin, or 90+% into Bitcoin back here. And I've ridden it all the way up. So like, I'd be happy if we kept dominance high, but I'm also really happy for people that have altcoins. Like right now I'm 92% Bitcoin and Bitcoin ETFs, but I want people to make money. I want new people to come into crypto. I think this is a great place to make money. And I'll never say like, hey, I only want Bitcoin to win. I'm not going to be tribalistic like that. So, yeah, I'm happy either way, but I think it'll be better for the space if we see some alts pump at some point, just to keep people excited and stuff, and to keep things building in crypto.
Yeah, for sure. Like you got to give the small dogs a chance. I think that's really important for the industry, right? It's just like if there was like one internet company that did well and then all the other ones just kind of faded into the nether and never, like I think like there's always going to be the good competition. It's nice to see like. I think you're right when you're saying basically like, those top altcoins, like, I don't know, like XRP or SUI or Solana, like these ones. But basically what this chart is right now is like Bitcoin versus SUI, XRP, Solana, and maybe like 2 more altcoins. Like that's what this chart is right now. Because like, sure, there are some altcoin or meme coins that are doing well, like Fartcoin or whatever, that have exploded and deflated. But yeah, I mean, that's basically what we're looking at. And I like this. I like this a lot more because I feel like the projects that are actually good, that should be getting attention are. And that's a really good sign for a healthier market anyways. So
yeah, I like what you said there about competition too, because like the whole point of crypto is to be decentralized. If all the liquidity goes into Solana and Solana is the only layer 1 that has any money and any building on it, like that gets a little bit more dangerous then for the whole crypto space, whether it's from price action or just like if you actually want to use it for something that's so centralized and that's what everything's being built on, then like a lot rides on it. If there's some kind of hack or something that could really hurt the crypto space. So I think you naturally want everyone to be making money, because then they keep on building and providing better products, and like more institutions outside of crypto want to dump money into crypto, right?
Or even create their own products, hey, I want to create my own stablecoin. I want to be part of this, and I think that's good. I think that's good. I know some people have problems with like banks creating stablecoins and stuff, but ultimately, like, it's a free market. You have to respect that, right? If we didn't have the free market, we wouldn't be here. So, that's kind of the way she goes.
Yeah, definitely.
Okay, let's see what other questions do we have here. Okay, I think this one's interesting. What do you think is the largest price driver for Bitcoin? Like, what do you think is most influential on the price of Bitcoin that you've seen?
So far, I think it's just between ETFs and the companies that are buying Bitcoin right now. I don't think that retail investors really drive the price very much at all.
Yeah.
And you can see that because they're very reactive. Like, people are bearish because the price is going down, and then they're bullish when the price is going up. But like, institutions are the ones that are dumping money in, causing that to happen. So it's not
Yeah.
like people are causing the price to go up, and they're dumping, like retail investors have so little money compared to the institutions right now. They're trying to get a hold of crypto. So I think that's where it is now. I think in the future, it will be from the same entities are buying now, but then also nations, I think, will be buying relatively soon, like maybe not the next couple months, but there will be plans, I think, this presidency for countries to start accumulating. And then also from retirement accounts. We've seen recently that like there are big institutions that are trying to get crypto into retirement accounts. And that's just like a drip method. Why do you think like the S&P 500 goes up year after year after year? Of course, there are dips, but like part of it is the money supply going up, and part of it's just that there are so many people that just buy it because there's nothing else for them to buy. They don't want to deal with real estate. They don't know anything about finance. So they just put money into their 401k and slowly buy the market every single year. And I think we could see the same thing happen with crypto. Like, and that's where I think the game kind of changes. Like every dip will be for buying. I think that's already kind of the case now during bull markets. But like if we have another $100 million every week that's buying crypto, no matter what the market looks like, or 200 million, that's gonna definitely help out the price. So yeah, I think that's kind of what I look for in the future.
Yeah, I think that's a really good point. Like a lot of the people that I talk to that are not like super investment savvy, basically all of their money that they've invested is because of someone at a bank told them that this ETF is good and it's good for their retirement, and this is what's going to allow them to retire, right? And so there's nothing wrong with that. Like I think obviously it's a valuable service for a lot of people because a lot of people, they don't want to spend that money. But you know, the fact that Bitcoin and other cryptocurrencies are soon going to be part of that offering as more of like a maybe high risk portfolio or ETF, it is going to be pretty influential because these people, a lot of them, they have no idea what they're even investing into, but they're consistently doing it because that's what they've been told is right. And now financial planners and these sort of advisors, they're now getting, you know, the ability to actually pitch Bitcoin ETFs. This is happening in Canada too. We had an XRP ETF recently launched on the Toronto Stock Exchange and stuff like that. And so now this is actually giving these guys the ability to pitch this kind of stuff. And, you know, I was talking with a wealth planner that, you know, I'm friends with, and he was saying like, yeah, you know, I can actually start pitching this now. And so I think that's really influential because ironically, that's like where I think the majority of the capital in the markets are from. It's just people buying things that they have no idea what they're buying, these ETFs, whatever, you know? Like all these basically older generation people that don't want to focus on specific things. I think that could alone drive, you know, trillions of dollars. And that's technically institutions that are driving that volume. It's not actually the retail because they're trusting the institutions with their capital, right? So
and like people think who's going to buy Bitcoin at $500,000 or $1 million? Like, and there are more people that will buy it than that buy it now, because like some people just don't like the volatility, especially if they're older and they have a lot of money. Like they don't want something that could go down 40-50% within 2 months, but they'll buy something that performs 12% and only has like the same volatility as the stock market. They're happy to buy that if it just gives them a little bit more and they're more diversified. And like there will be buyers at every price of Bitcoin because the volatility will eventually go down. And there are people that just, like if they're running $1 billion, they don't want to buy something that's worth, a commodity that's only 10 years old, 15 years old, whatever it is. They'll wait. They'll get worse returns. They're happy with that. They don't care. And then like we talked about, like the ETFs or the 401ks will buy no matter what the price is because they're not looking at it every day. Like they're just happy that they, will be able to retire someday. And like Bitcoin has performed so well in the past, it's going to be really easy to say like, hey, put a 0.5% allocation towards Bitcoin in this retirement portfolio. I saw one study that was done that showed like Bitcoin over the last 10 or 12 years, if you had put 1% in Bitcoin and 99% in cash, you have outperformed 100% in the S&P 500. Like it's easy to look at it now, but like if Michael Saylor's right about it performing 30% a year, 25% a year, like you could put 2 or 3% in and it will be bigger than the rest of your portfolio in the next 20 years.
Easily, while the S&P might just barely be outpacing inflation, Bitcoin's like more than 3x that if he's right. In that event, I mean, it's like a no-brainer decision. And I can see how a lot of, wealth advisors may pitch that idea, maybe not verbatim as to how Michael Saylor would, but, just that idea of like, hey, like, yeah, this is higher risk, but like, look at the potential upside,
Yeah.
and then that might be very attractive to some people to put maybe 10%, 20% of their overall ETF portfolio into or whatever, right?
Yeah.
So
And there's still so many people that can't pitch it. Like I was talking to Fidelity Advisors the other day, and they still can't bring it up to anyone. Like if someone asks them about it, they can talk about it and maybe they can like help them buy it. But there are new people every single day that are allowed, like it passes through compliance, that they're allowed to talk about crypto and tell people about it. So yeah, like it's just crazy how it's still changing now, and people think, oh, it's been out for a year and a half, everyone's bought it by now. That's not the case.
Yeah, for sure. Yeah, it's pretty crazy to think. I did not think we'd be here, but yeah, here we are. Yeah, I think it's pretty cool. And in Canada, I'm really surprised too. Like they were able to even get an ETF out there before America. Like I thought there was no world for XRP where that would happen. Like I was just so shocked when I saw that. But it's really cool just to see that these things are happening, and they're happening faster than a lot of people thought they would. I think it's good for the market.
Yeah, definitely.
All right. So technical indicators. Okay, so yeah, I wanted to ask you about tools or technical indicators or data that you like to refer to understand the markets. I know we went over that one spiral chart with Bitcoin. I thought that was really cool. You kind of broke it down in a way that helped me understand it a bit better. Yeah, because it is kind of confusing. But I was wondering if there's any other tools that you like too.
Yeah, so shameless plug. I do have a link to this. It gives me, I think, like a small referral bonus or something. I think it's like 10%, and you get like a 10% off code or something like that. But Into the Cryptoverse, which is Benjamin Cohen's
I know
website. Yeah, it's got so much data. Like I've spent hours on it, and I think I've looked at like 5% of the website. But they do a lot of or they look at a lot of data and like compress a lot of different metrics into one. So like you can kind of see indicator dashboard for how risky the market is. It looks at like price metrics, like how quickly the market's been moving up or how overheated it is. On-chain metrics, how many people are transacting and stuff like that. And then social media. And you can see like an overall idea of how risky the market is. But there are a couple charts that I really like. This shows us just like the trend over time, crypto market trend line, and shows us if we're overheated or underheated or whatever. And this is a different way to look at it here. It shows like the market is still 5% undervalued based on where it should be based on like historical trends. So what we've seen in the past is the market goes up very quickly and gets overheated. Like back in 2013, it was 15% or 15x overheated. Back in 2018, it was like 12x overheated. Last cycle, 400%. And we haven't gone anywhere near that this cycle. I think the most we've gone is like 20% overheated or something like that. So if we go back to this chart, it like the value of crypto goes up over time because of adoption and because of improvements in the technology, because of money printing, and it's just like slowly over time. And of course, like the price goes up and down. But if we just look at like the end of the year and say we're going to top out the end of the year, let's say like late November, the fair valuation is 4.7 trillion. Right now we're at 4 trillion, just under 4 trillion. So like you're looking at another 20% move, but then also that's just for fair value. If we go like 200% overvalued or something like that, like we're looking at a pretty big boom, like 3x on the whole market. So like I like looking at this. This is super simple, like just looking at historical trends. But then you can like some of the other charts like ROI after the bottom, just to get an idea for where we are this cycle versus other ones. I'm going to be watching the Pi cycle indicator or Pi cycle top indicator too, which was made recently to like fit old data, but it's pretty, it's been pretty great at determining the top of the market within a few days. So I'll be kind of watching this too, along with the cycle and along with M2 money supply. We're not anywhere close to like the inversion where it calls for the top, but like I said, I am an affiliate for them, but like I don't make barely any money from it. But it's cool because you can look at specific cryptos and it will show you like XRP. You can see the key risk indicators, like versus Bitcoin, the price action, how risky it is, and it's showing that it's pretty overheated right now just because it's performed so well. But also it shows like XRP is probably the most explosive of the top cryptos. Like it does nothing, then all of a sudden it goes 5x or 10x
Yeah.
or 20x.
Yeah.
And then like you can see the distribution in the different like heated categories. So like it's at 0.77 risk, right? As time goes on, if it stays around the same price, the risk goes down. But like
Right.
it spends barely any time this overheated. Like it does pump really hard, and then usually it cools off relatively soon compared to some other cryptos. But like that also means that you can buy a lot of the time when it's undervalued or like pretty low in price. But yeah, I like looking at stuff like this. This is not my be all and end all or anything like that, but that gives me some ideas because I am naturally bullish. Like I'm overly bullish. So I naturally hold too long. But this cycle, I haven't bought too late compared to the previous cycle where I was like averaging in more all the way up. I haven't done that this cycle. You know, I bought the majority during the bear market, a little bit at the beginning of the bull market. And then right now I'm just trading with leverage for any extra exposure. But that's pretty much just house money at this point. So, yeah, I guess that was a mouthful for a couple indicators. But yeah, I use a variety of stuff. And like,
that's really good.
Yeah. My trading doesn't require very much either. Like I'm not day trading, just like you said. So I'm not like worried about getting in at the specific perfect price. Like I've done videos where I explain my leverage trading strategy, and it's like, you know, we're $4,000 off the high in Bitcoin, and I'm doing a 3x leverage trade. I think over the next, few months will go up. So I have so much cushion. Like unless we take a 33% dip and I add nothing to my margin, that's the only way I can get liquidated. So it's not like I need a lot of technical indicators to look at the price every moment, which I think is smarter and probably healthier mentally over time anyways.
Oh yeah, it's gonna save you so much stress. Like I know so many people that like they try to do like super high leverage, like they'll go like 40x leverage or something crazy, and like they're literally like looking at their phone all the time like this, like it's just constant. Oh, check. They're like sweating bullets. I can't do that. Like I got a family. I got to look after my baby boy. So I totally understand where you're coming from. And I do think, so like Benjamin Cohen, what he really likes is like the power laws, right? Like he looks at those, and I like those graphs a lot too, because it shows how, obviously there's a large adoption curve, and you can apply this to anything, any new industry. There's a large adoption curve. And obviously as time goes on, it starts to like kind of not quite flatline, but you kind of reach your peak eventually. And so crypto, obviously, it has had mass adoption the last 3 cycles. And so you can kind of see with Bitcoin how it's just kind of like starting to get to that point where every bull run is a little bit less hectic than the last, but it's also a lot more stable, which is a nice thing. So like it kind of becomes easier to like not kick yourself in the back end if you miss or don't sell too close to the top, because the stability is going to be better. But it is really awesome to have those tools, because at least you can have a really good idea of when things are getting heated and when is probably a good time to take the foot off the gas pedal a little bit and make some money, because that's what we're all here for at the end of the day, right? Yeah, I definitely put like my cryptos in 2 different baskets. One is like I will hold this throughout every bull market and bear market unless we get so overheated that it's just dumb. Like unless I'm taking screenshots and sending it to people, like I'm going to hold this crypto forever. And then like the rest are like just for making money. Like they're just for speculation, for increase in the money supply. Like I'm buying it because of extra adoption, and I'm happy to go take that money and put it into Amazon, Google, these companies that are growing, that are more steady, or, real estate or something. And then I'm happy to buy them back at the bottom of the bear market. And I think that's how a lot of people should probably think about it. Like figure out what you're actually comfortable with and what you really understand and feel like you want to buy more of if it falls 80% versus what you think it's going to go down to 0 if it falls down 80%. Like then just go from there. Yeah, absolutely. I think that's a great mentality to have. And I think like everybody will kind of develop their strategy the more bull runs they've been experienced. I think like all of us, our first bull run, we can like look back and we can think like, wow, I made so many different mistakes. I'm not going to do that again. And that's really good. We all need to have that moment of realization where, like you were kind of saying, you're buying into the pumps consistently, and then you didn't maybe time your exit the way that you would have wanted to. Now you're not making that same mistake again this time around. That's really good. That shows a lot of growth in your strategy, which is really important. And it's very similar for me. Like I spent like 2-3 years during that bear market, or it was about 2 years during that bear market, just buying, like every single day, literally every single day I was buying. And now obviously I've slowed that down tremendously. The only time I will ever buy is if we, like with XRP, is if we come off of like a major correction where we just went down like 30% in 2 days or something like that, or more, right? Outside of that, I'm not touching it. I'm just like, I'm just going to let this kind of ride and just enjoy it. And when I think that we're at that point or close to it, I'm just going to start offloading, basically.
Yeah, and that's a great thing about crypto. Like, it's so volatile. XRP just this month, like what?
Yeah.
16 days ago, is it $2.26? Like,
Yeah,
it's gone up 41% in 2 weeks. And like, I don't know if there's been a ton of news since then, but like,
yeah, it's just crazy.
That's a cool thing about it. Like, if you've got a good head on your shoulders, you can make tons of money. Like, volatility is, it's not a bug, it's a feature in crypto. So yeah, use it to your advantage.
For sure. Because I think there's going to be a time when this volatility kind of dissipates, or is nowhere near the same level that it is now anyways. It's going to be more similar to the stock market maybe. So I think like right now is awesome. And there will be a time when a brand new industry comes through and there's going to be crazy volatility there, and maybe we can have fun there too, right? But that's just kind of the way things evolve over time.
Yep.
I had one more question that I thought was kind of interesting. So I know like everyone, like people have their own opinions, right? Some people really hate ETFs. Some people like them. You mentioned that you actually hold Bitcoin and the ETFs. So I wanted to ask you, like for your strategy, like why do you like to get ETFs? I'm really curious.
Yeah, so actually I've been a huge believer, proponent in the ETF since they came out, for a variety of reasons. And I realize that they have drawbacks. Like, that wasn't why crypto was created in the first place. But I think a lot of investors fall into two camps, like people that want crypto for the freedom and like to hold their own currency and all that kind of stuff. And then there are people that want the investment returns. And like, if you believe in holding your own currency and being sovereign over your wealth, then like the ETFs aren't for you, because BlackRock can mess up. But also, I think BlackRock and Fidelity will probably do a better job of storing their crypto than I will. And like, if they lose their, like a small portion of their crypto, they're probably going to come out of pocket to like back it up. Well, I just lose it. So like, there are a variety of reasons outside of that too. And I don't blame anyone that wants to keep all their crypto in spot. I wish I converted more of mine, honestly, because as someone that's also on YouTube, like I'm worried about safety for my family, especially as like the price of crypto goes up. Like, it's very important to secure crypto correctly. And the danger goes up as price goes up. I've heard too many people with horror stories of like wrench attacks, being attacked and like their wallet stolen and stuff like that. So I'm cautious of that. I also think that there will be a time where we can take loans against our crypto. So if Bitcoin continues going up and I want to buy a rental property or I want to buy a second home or something, it would be nice to have flexibility to not have to sell anything and just be able to, take 1% of my Bitcoin and, go buy it and then pay it 6%, then just pay it back or something like that. Or, I think there are various other reasons too, to be able to buy it in retirement accounts easier. Like, there are certain places you can do that now, but yeah, I think there are a variety of reasons for it. Also, like call options and put options if you want to make some constant cash flow too. So yeah, I think there are a lot of reasons to buy ETFs. But yeah, those are just a few.
Yeah, I think that's really smart. It makes a lot of sense, especially for like people like us who, are investing in things outside of crypto as well, right? The general banking financial world is nowhere near caught up to what's happening in the crypto sector. And so like, if you go to the bank and you show them that you have like 20 Bitcoin or something crazy like that, they're going to look at that and be like, okay, what do you want me to do with this? But then ironically, if you go to that same bank and you show them that you have 20 Bitcoin that's inside of like a ETF or something like that, they're gonna be like, oh great, I have no problem giving you a loan, right? Which is pretty funny when you think about it, but it also kind of makes sense because like you were saying, the security thing, right? The bank doesn't know if your Bitcoin's going to get hacked tomorrow or if it's even yours. They don't want to do all that extra work of like tracking all the on-chain whatever. And with an ETF, it's a lot more certain. Like they can kind of, they have access to those records. They can see when you bought it, how your money is, all that kind of stuff. So it makes a lot of sense for that for sure. And I think like some of these ETFs and some of these like Bitcoin stocks are also doing pretty interesting things. Like you can sometimes get access to like leverage Bitcoin in certain capacities. Like you see like MicroStrategy and how like the stock generally actually outperforms Bitcoin. So like that could be kind of nice too. You can get access to some of these unique functionalities that maybe you can't always get in the crypto space. So I think that's cool too.
Yeah. And that actually happened to me last week or the week before. I was talking to a bank about a loan and they they looked at my portfolio, but then they would not count digital assets. So kind of funny you said that. But yeah,
Yeah, they just
definitely
like throw it out. But yeah, I've had the same thing happen. They're like, sorry, we can't use this like at all. And I'm like, are you serious? Like this is like 50% of my money. Like, come on.
I literally had a bank that said that it wasn't liquid capital. They were like, what do you have liquid? And I was like, what do you count? And they're like, stocks and cash. I'm like, so
that's it.
No,
boom.
Like I get no property, but like no crypto. You don't think that's liquid? I can't go sell it. They're like, no.
Yeah.
I'm like, okay, whatever. But
the funniest part is when these banks start offering crypto custody services, they're going to count that 100%, but they're not going to do it now until like their hands in the water. You know what I mean? Like they're just getting ready. Yeah, exactly.
Yeah, that's funny.
Yeah, I think that those were all my questions. Everything else we covered in the video. So
yeah. Well, I appreciate you jumping on. We'll have to do this again. Obviously, like as the market goes on and there's more volatility, I'm sure people will have lots of questions. Maybe we'll even field some questions for each other sometime. We'll pick the best ones from our community or something. But yeah, appreciate you jumping on. This is, I think, my longest call I've ever recorded. So
yeah, same here. It's a long one. We did like a podcast.
Yeah, awesome. Exactly. Well, cool, man. Obviously, I'll have links to you. You'll have links to me. There are links to BYDeFi, to BTCC, to BitUNix, to all the exchanges we use down below. Of course, approach with caution. Make sure you know what you're doing. Thanks so much, man.
Yeah, thank you.
All right, peace.
Peace.